Before we begin, it's my pleasure to introduce our speaker for today, Muhammad Amiruddin. Amir is a marketing representative for several brokerage companies. Besides that, he's also the main speaker for Trader Jalanan Trading Class and has conducted numerous trading courses. So without further ado, I am delighted to hand over the presentation to Amir. Amir, there you go.
Assalamualaikum and good evening, everyone. Tonight is the first time I conducted my webinar in English officially for Bursa Malaysia. Apologize for any if I missed any words. So the title usually I conducted in Malay language for this webinar, but tonight I plan to share this important topic, which I have a very high passionate about, about trading psychology, which I think rarely be shared among traders because it is not very exciting compared to learning technical analysis, which can clearly show you how to get the profit and everything. But essentially, trading psychology comprises 70%, made 70% of the result of our trading. Because when we fail in our trading, when we get losses, majority of the time it is because of our trading psychology and not merely because of our technical analysis or fundamental analysis misconduct. So in tonight's webinar, without further ado, I want to share with you guys a title, 5 Steps for Overcoming Psychological Blocks in FCPO Trading. So general disclaimer, just like usual, nothing because there's no charts in these slides, so I think there will be no issues. So overall view, like usual, as per usual as my previous webinar, the purpose of my webinar is not to deep dive, like very deep inside the topic, but to give you guys some big ideas of what you should know about trading psychologies based on what I have learned throughout my trading years, and based on from all my learnings and books that I have read about trading psychologies and things that I have applied, so that at least, because we only have a very short time, this short webinar can trigger you to do some more readings, learn some more things on that particular topic that you think you are missing in your trading journey. So you can explore more deeply after this webinar. And tonight's webinar can be a bit confusing because there is a lot of things to explain and it might be something new to some of you guys. And I didn't have much time to make a mind map for everything. So do share your notes and you can message me so we can share with our friends. Okay, so be ready. We'll start now. So 5 things we will learn today. The first thing is a framework to address your psychological challenges in trading. So for me, this is the most important thing. You have to know the big thing. What is the factor A, B, C, D, and E that you have to tackle? The big ideas, the big factor that affect your trading psychology. You have to understand the framework first before you go deep and dig into each of them. How to identify psychological patterns that affect our trading performance. We know that we have some issues with our trading psychologies. Either it's a FOMO, or we have a fear we have fear of losing, or very emotional, or very greed. So how to understand the patterns of each of them? We have to understand that this emotion is not just an emotion as a word, but there are more deeper meanings in them. And how to find the root cause of the problem. After we know the pattern of our emotional psychology, we have to understand what is the root cause of the problem, because the problem is not us. Every emotion that we felt have their own root problems, have their own cause that we might not realize because we are just brushing it off. Previously, we thought it just comes once in a while, but actually there might be some root cause of the problem that we have to dig deeper inside so that we can resolve the problem and not just brush it off. And after we know the root to the cause of the problem, then we can understand the emotions and we will find the solutions to solve the problem. So I'm trying to trying to what do you call it? Arrange it accordingly, according to the flow, so that you understand that you have to do understand from part 1 to part 5. Then you will understand the flow of how to tackle your trading psychology issues. So, the first topic, what is your framework? Okay, what do we usually do when we have problems in our trading? What do we usually do? When we have problems, usually what we do is we analyze our trades technically, or we will think that our technique at that time have issues, have problem. So we decided to learn new technique and just brush our old technique off. We think that is the problem, so we just learn new technique. However, we still it still doesn't solve our trading losses problem. Thus, we should understand that the issue could be not confirmed, but it could be a non-technical issue. It's not about our technical analysis. It's not about our technique or setup at all. But we should try a different approach to tackle our problems. Maybe it's because of our mental, psychology, emotions, because although we have a perfect mental zone, but if we have a perfect mental zone, like we are very good in our mental, psychology and emotions, but without edge in the market, without the trading edge, we will still not make it in the trading. However, if we have the edge, we have the trading edge, we understand our trading setup, we know it could be profitable, but we still struggle in our trading, then that means the problem is with our mental. And our mental game cost us a lot because we still don't understand what causes our losses. So this is the direction that we should try to approach our trading, instead of just doing the same thing all over again, like what we previously did before, which is about technical analysis, focusing on technical analysis only. Try a different approach. So what are our common big mistakes in trading? So this, I would like for you guys to participate around for 2-3 minutes to understand. We will see the majority of us, what is our common big mistakes in trading. So can I ask all of you guys to join at menti.com and use the code 89180787 and answer this question. And let's see, as a herd of people, what is our common problem? So we will, I think, give around 2 to 3 minutes. That will be enough. What's the website again? It's at the top of the website, these slides, menti.com. And insert the code 89180787. All right, so we have several responses here already. Hope analysis, hesitate with strategy, FOMO again, ego, emotions, overtrade, second guessing. All right, okay, keep it coming. So I did these presentations in Malay language before, around the same thing. There's a bit difference, but we have around the same kind of responses, in which if you guys just look at the response here, you can see most of the response is not really about. Wait, how do I scroll down? Okay, no, it's not really about our technique or our setup, but it's about cannot cut loss, impatient. Let's see. What else do we have here? Oops, or not this one. Okay, so ego. This is all about something that is not related to our technical analysis per se. This is, if we can categorize it, we can categorize it in the sense of it's about trading psychology. So, but however, although we know that our problem is with FOMO, with ego, hesitations with our strategy, without denying that maybe some of us have problems with our technical analysis, and thus we have to improve on that as well. But if in majority of us who have maybe involved in the trading journey for several years, and we have learned so much about technical analysis, the problem might not lies on our technical analysis anymore. With this answer, it can show you some things. Okay, All these things is about trading psychology. So, however, why is although we know that the issues is with our trading psychology, but the solution to that is we keep on trying to find new techniques or trying to do other things besides uh, understanding the root of our problems itself, which is our trading psychology. Why not we try to understand how to solve our FOMO, how to solve our hesitations with strategies, how to solve our ego or overtrade. This is the thing that we should do, and the thing that I realized in these past years, which causes me to delve in very deep into this kind of field in the trading. So I dig very deeply into trading psychology. I joined many courses and read all the books to understand my own problems. So I found several answers that I hope will be beneficial to all of you guys tonight. Okay, so let's move on. So that proves something from the survey. So among my biggest mistakes myself personally, if there is no setup, but sometimes I want to force it to look like it have appeared. It's not completely there yet, but I think okay lah. I think this one also can do lah. Just enter lah. I think this can go well. So that I can find. I just want to find a reason to enter. So the problem here is it's like maybe greed or maybe addiction to trading. I just want to enter to press something, buy or sell button. So this is my issues. Or sometimes I'm hesitant to enter after a streak of losses or early exit because of a streak of losses as well. After I exit, then the price goes up again. Or maybe I exit before it hit my TP. I don't follow my trading plan. And then I chase the market when the price didn't hit my entry price and it just goes. I'm beginning to feel FOMO and chase the market. So or sometimes I move my stop loss too fast because of what is the reason. So this is what we want to understand. All this is some mistakes on the surface, but what is the reason behind the mistakes? Why did I move my stop loss too fast? Is it because of a greed, or is it because of a fear, because of previous streak of losses? So this is what we have to understand. Sometimes I move my TP too early. So every mistakes that we make, we have to dig deeply into each of them, because each of them may have a different reason for why they are happening. Okay, so why is there still this issue even after many years of trading? We still can't control ourselves from doing because we don't know what we are fighting with specifically. We don't understand our own emotions. Why? What are we fighting? Is it greed or ego, or is it our fear? We don't understand because we don't really try to look at it objectively. We just brush it off. So if technical analysis has their own rules, mental game, our trading psychology also has their own rules that we have to know and understand. And this is one of the reasons why, for me, it is important for us to go deep into this issue. Very deep, because mental games is a different game from technical analysis. So we have to start from zero again and understand from zero, from A to Z, why, what we should know to solve our issues. So if technical analysis rules, for example, one of them is maybe to buy at support and sell at resistance, or buy at when the moving average crossover, MACD there's a divergence happens. So mental game have their own rules as well. One of the rules in mental game is what we call as Yerkes-Dodson stress performance curve. What you should understand from this curve is the higher our stress level, as you can see from the curve, our performance will increase until one point, in which after that, if our stresses becomes greater, our performance will decrease, will reduce, will go to the bottom. So emotions that are running high at some point can reduce and shut down our decision-making process. So stresses is good for our performance in whatever field, including trading. We need the stress. However, if it just goes a bit above our peak performance, then that will cause we become fatigue, exhaustion, panic, anxiety, anger, burn down, and breakdown, which is the last stage. And I think we are familiar with this kind of performance in our trading itself. There are some stresses at the early stage of our trading, maybe at the early days where we are stressed, but we are focused, we are motivated. However, when we got some losses, and then our profits turn into losses, we get margin call, then our stresses level increased, and it beat our peak performance level of stress level. and we become more fatigued, more exhausted. We can't see the chart objectively at that point. So, and our performance will decrease, and we will just bust our account at that point of time. So this is the thing that you have to understand, so that we know that our stress level will affect us at some point, and we have to know how to overcome that. Okay, so a mind that doesn't work well. So this is another mental game rules that you have to understand. So our brains, our mental game, one of them is affected by our brains, and our brains are organized in hierarchy. When our emotional system is overreactive, it will shut down our higher brain function. So you have to understand this. In which our brain is organized in a hierarchy in the level 1 to level 3. So level 1 is very basic, where all the important function of our brains are sorted. Our heart rate, breathing, balance, sleep and wake cycle, and such on. And then the next level, a higher level, is our emotional system. And our level 3 is our mental level. And at this level, it have all the higher level function, such as thinking and planning. But this hierarchy, because of this hierarchy, it have a big problem, have a big impact to our mind. Why? Okay, let's see this picture. Okay, so this is the limbic system. So we go a bit into biology here, just a bit, okay, so for you to understand, because the mental state is, there's a relation to the anatomy of our brain. Okay, so, okay, I think, okay, if we can see here, this is the prefrontal cortex, is where the attention, concentration, and focus is at. Amygdala is our emotional regulation. So this is the third level of our brain system. So when we are affected here at our prefrontal cortex, it will affect all the second level and the first level of our brain system, as you can see here. When this level is affected, it will affect our emotional system and this one as well. So maybe you can understand when we are attention is affected, we are stressed, all of those will affect our prefrontal cortex. And from here, it will goes down and affect our amygdala, emotional regulation, and just shut down the whole system. So we can't think rationally already at that time. Okay, so when we are too emotional, it will cause us for a poor decision making due to loss of higher brain function. Maybe you can understand further from this picture. If you can understand this picture, basically it shows that this is the prefrontal cortex. When there is too much emotions attack our prefrontal cortex, it will like inhibit the function to our hypothalamus and amygdala over here, where it regulates our emotions. So when it inhibits the sending of all those neurons into this system, then that's where our emotional system will just shut down, and it will impact our emotional system and trading our mind basically. So that's why we can't think clearly already at that time. Okay, so this is the stress. What happened when we are stressed? The amygdala commands the production of excess norepinephrine and dopamine under stressful condition. That in turn shut down the functional of the prefrontal cortex. So it shut down this prefrontal cortex. So that's why we can think clearly. Okay, so this is the biological explanation behind it. So the goal of this system today, because we already understand why does sometimes we can think clearly. So we want to underlie the issue step by step, how to solve this issue step by step. Okay, emotional control is not the solution. We have to resolve the control. We have to resolve the emotions problem. We don't just want to control it. We want to resolve it. We want to finish it for sure. Okay, so the steps are, the first one is pattern mapping. How to resolve this issue. So we need to identify the macro view of our emotional volatility. We have to understand what happened when we are having emotional volatility and write it down one by one. So we want to detailing it, our emotional reaction, what we feel, what do we do when we have FOMO, for example. What happened to us? What did we say? So we will go deep into this after this. There's a specific slide for this. From there, when we understand the mapping of our issues, we can identify the root of the problem. So to identify this, again, we need to uncover the hidden flaws, biases, and error in learning, okay? And after that, we will go is also into the identifying of the root of the problem. Then we can correct the problem. We know this. We have some steps to correct the problem after we have identified the root and we have mapped the pattern of our emotional problem. Okay. Right. So until this point, you guys all right? I'm sorry if it's too fast. Everyone okay? If okay, just can click on the chat. Okay. So I know everyone is still here. I'm not sure if I can read the message here. Okay, all right. Okay, good. So the system. What is the system? What is the system to tackle our mental game? One of the system to tackle our mental game is A to C game analysis, in which we want to detail the strength and weakness of our game at every level. Okay, so from the structure of all, the structure of the whole thing that we want to do is first, again, mapping the pattern. We want to identify step by step what actually happens. So this is the things that we will see, our thoughts, our emotions, our behavior, our action. And then we want to understand the root of the problem using mental hand history. And the third is to strategy to settle the problem. Okay, so how? What is the way to identify the psychological patterns? We have talked much about theoretically what we should do. So how we want to do it? How we want to identify the patterns? Okay, so this is let's see how to build our emotional map. How to track our emotions to be mapped. Okay, so observe what you should do. What we should do is to observe and write down what happened before, during, and after our trading mistakes. I know this may sounds very tedious to be done, but as much as it is important to track your trading journal in technically when you buy, what price you buy and what price you say or what price you sell, it is also important to track your emotional journal, because this is where the major issues come from. So you have to understand it. Okay, this is one of the things that we can consider. So we have to map our emotions. So this is the things that we can consider to map, which is our trigger. What trigger us to have that emotions? What is our thought when we have that emotions? What is actually the emotions that we are having at that time? Exactly what? Try to write it down. How do we react? What is our behavior at that time? And what is our action? For example, if we have FOMO, do we like our action is to just buy market or sell market at that time? And what is the changes happen to our decision making? For example, maybe at that time we have planned to actually queue buy limit at some price, but because of the trigger, it changed our decision making totally, and we decided to just cancel the queue and just buy in market. So we have to write it down so that we understand. And how does it change our perception to the market, opportunities, and current position? So we will see some examples. I know this might be a bit confusing for some of you guys, but we still see example. Okay. Initially, okay, I know, and there is quite a lot for us to jot down. So try to jot down as much as you can, and just try to make it habit. It will be hard initially. It will be very hard because this is something new. But trust me, if you try to make it a habit, you will see something that will help you. Just try to maybe spend 5 to 10 minutes a day, do these kind of things, and you will understand the flow of your issues. So for example, with FOMO, what we can see, a nervous sensation in the stomach, thoughts, don't miss another one, or we want to switch to 1 minute chart. This is some signal from our triggers. Okay, so this is our example. Our trigger possibly is when we trade FCPO intraday. Okay, then our thoughts at that time, I can't believe this is happening. Sorry, I think the trigger have to be made more specific. Maybe the trigger, we trade intraday FCPO and we get stopped. After that, the price move in the correct direction. I think that is better. So our thoughts at that time is, I can't believe this is happening. I won't let my market stop again. I have to be right this time. Okay, that is our thought at that time. And then our emotions. Try to feel our emotions. What do we feel at that time? So, for example, if we have this kind of thing, we got stopped and then it moved into our correct direction, maybe we feel that I want to revenge. When any trade that I know that I have an edge, but it doesn't work. some of your trades have an edge, but it doesn't work at that time, so that's why you have to get a revenge. So you just brush off your trading technique on at that time. So your behavior, Phil, what how do you behavior? What is your behavior at the time? You are hyper focused only on one position. When the price goes up, you only think of going long, long, long. You are not considering that price may be reversed at a particular time anymore. You are not thinking about that. You believe that it will just go long. Edge is okay. I saw some comment. Trading edge is the advantage of your trading techniques. You know that your trading techniques have an advantage to the market. Basically, you know it works. You know it over time it will works. So your action at that time is constantly looking at your profit and loss. So when you enter the market at that time, you just look into your profit and loss. It goes from profit 100 ringgit to 500 ringgit to losses to 500 ringgit. That is the thing that you consider on. You are not looking at the chart anymore. You are not being objective anymore. So I know I possibly this may happen to most of us, right? So, but we never try to jot it down specifically. So this is the stage where we want to jot it down, so we understand. And the changes in our decision making, what happened? We are focusing on revenge and getting the money back. We are not thinking objectively on the trading setup. We are thinking about, okay, I lost 500 ringgit. I have to get back the 500 ringgit back. So that is the only thing that we are thinking of. What we should do is we are not supposed to trade the money. We are supposed to trade the chart. So we are not focusing on, okay, we want to cover back the losses. We should think of the chart. Is it are we entering at the correct direction? Are we entering with the correct trading plan that we have planned before? So that is what we're supposed to do. But because of the trigger that happened, it changes our decision making. And it changed also in our market perception. We read too much into price action. At this time, this thing just happened to me recently as well. We read too much into price action because the price have gone too much up, and we think, okay, I think this will go long. It will not go short anymore. I believe this will go just long. So we start to maybe enter extra lot from 1 lot, 2 lot, 3 lot, 4 lots, which is a wrong position sizing technique. So we just very FOMO already, and we believe it will go long. We believe we can predict the price movement because suddenly there's a very Marubozu candle, a very big one. It breaks all the resistance, and then some things we may get some luck, but when the luck goes off, you will just bust off your trading account. So this is, for example, one of the mapping that we can do. Is it clear to you guys? So the mistakes, what is the mistake that we done? We will take the same trade over and over again. When we get cut loss, we will long again. Cut loss, we will long again until we realize our mistakes is very clear. We are being very emotional on this trade. We're not supposed to just take all the long positions. We forgot about all our trading plan already. Then it is clear to us. Okay, so the next time we trade, remember what happened when this issue happened and write down the details. In this way, when we collect every mistakes that we done, we will have a book of journal of the mistakes and that we can see and remind us of the mistake that we have done before. So basically, that is the thing that can help us. So this is what we call as pattern mapping. Is it clear to you guys? Maybe some response. Yes. All right. Okay. So in the beginning, many traders may not see the signal because we are not used to to do this kind of thing. And even after this webinar, I believe not all 100 plus of us will do it because it is too tedious. But from my experience and from my learning with many legendary and professional traders, from all the books that I read, these are one of the things, the tedious things, but we are very helpful that push them to become a better trader. So if you guys want to push you guys to become a better trader, try to do this first. All right? I've been through all those. Okay, just try these things. Okay. So the best moment for you to write down the journal of your emotions is after the mistake is done. That is an opportunity because the emotion is very fresh at that time. So that is an opportunity for you to think and identify what did I did wrong. So write it down immediately. Maybe you can all these criteria, all these what you should write, write into an Excel. And what is you just insert what is the trigger to trade that time? Why do you trade? Is it because there is a series of losing trades? Blah blah blah. What were our thoughts, emotions? So write it down. This when we are very emotional, that is the best time for us to journal. Okay. Okay. So and recognition is a skill. Okay, to recognize all the emotion that is happening inside your brain, clear but not easy to apply. Correct, because this is like your technical analysis, fundamental analysis. It is a skill and it needs continuous practice. Okay, but continue to do it. Okay, when because like any other skills, when you continuously do it by time, it will enhance the ability. Okay, and we will be ready. Just remember when you first started your trading journey, when you first started learning about support and resistance, it sounds very hard. But after some practices, it becomes like your second nature. So this is the same thing. Make it your second nature in your trading journey. Okay. Okay, but do this every day for 2 weeks. Try to do this every day for 2 weeks to develop the habit and see what happened to you at that time. Okay. Okay, all right. So let's see, because I don't have that much time. Okay, another example. Let's see another example. Right. So the instrument, maybe what happened to you, the situation at that time is you take a loss and then you revenge trade. So see what trigger you at that time. You took a stop out and then full stop loss. So your thoughts at that time, this is BS, you say. Let me get it all back. I'll just trade a 10 lot and make the loss into something beneficial. And your emotions at that time is greed, frustration, doubt, lack of confidence. And your behaviors go on tilt. You abandon your trading plan completely. What's your action? Make trades that no longer have the same long-term edge or straight up gamble. That's what you did. That is what you do at that time. What is the changes in your decision making? And focus on making windfall profit to soothe over the last loss. And change in your market perception, you're no longer looking for ideal areas. Hugely lowered standards. Points to profits is all that matters. So your mistakes, you understand that. I'm trading completely like a gambler, not applying my skills. So I think this is some of the thing that happen to most of us, but we just don't journal it. Try to journal it. Okay, now number 3. So that is the second one. Okay, so the third one, after we have done the mapping, then let's see what is the 3 ways to find the root cause of the problem. We have the map our problem. What is the 3 ways to find the root cause of the problem so that we can solve the problem? So the first one is I want to introduce to you a concept that may be new to most of you guys, which I learned Inchworm concept. This is concept taught to me by Jared Tendler, a mental coach, in his book, The Mental Game of Trading. Number 2, A to C game analysis. And the third one, understand what is causing the problem on the back end. So the root cause analysis. Okay, so let's see the Inchworm concept. So for most of you, I'm not sure what is it in Malay, but this is inchworm, okay? And if you know how inchworm move, let's see in a video here. How does an inchworm move? It move by moving ulat bulu, okay? So it move by moving the front body. It push from the back. It push from the back of his body to the front, and then it will go front again. So let's see a video here, because we can see there are 3 parts of the inchworm body. Yeah? There's a rear end, middle part, and front end. Okay, so just bear with me. Let's see how it moves. Pachat. Okay. Right? All of you guys can see the video? Not sure. Is it viewable? Let's see. Just see here. Okay, can see. All right. Let's see. Trying to make it quite slow. Okay. Can you see how it moves? It push from the back of the rear end, and then the front end goes to the front. Then how it moves. See one more time. It push front end. Okay, the rear back it push and then it goes front. Okay, so keligeleman. Okay, so what is the relation to our topic today? Okay, so this What is the similarity of the inchworm to this? So inchworm, if we see, it actually looks like a bell curve. And our trading is actually, we can, if we can specify it, actually we can analyze it in terms of a bell curve as well, in which there is a left, perhaps it is not a very perfect bell curve. It might skew to the right a bit, or it might skew to the left. But in general, our trading game is like a bell curve, in which a majority of our trading skills might be at the B game. It is a solid, it is good, but not good enough, but not that bad. That is B game. It is a majority part of our trading skills. And we have some terrible games in our trading skills, which is the C game. And we have some a very best game. Maybe our technical analysis is very perfect. So this is our A game. But maybe our mental issues is very terrible. So this lies on the C game. And the solid one is sometimes good, sometimes bad. Is maybe some other else. So we can see it into like a bell curve. Okay. So like an inchworm, the only way for us to move our A game to the front, we want to move our A game to the front so that we can move forward. We want to have a better A game, is to move our C game, the C game here, to the front as well, in which it means that we have to improve our C game. This C game right here, let's say from -3 and -2, it have to goes to -1 and 0. We want to improve the C game. And when we improve the C game, automatically our B game will move forward as well. It will push forward, like how the insurer moved just now. When the rear back is pushed forward, the middle back and the front back is pushed forward as well. So that is what happened here as well. When we improve our C game, our solid B game, when normally it lies on -1, 0, and +1, when it pushed because of the improvement of the C game, this B game will move forward. Maybe it will goes into +1, +2, and +3. And our A game will push forward as well, where it goes to +4, +5, +6. You can see that. So the purpose of that insurance concept is our objective to settle our problem is to focus on the root cause, in which we want to settle the back end of our trading issues, which is the C game. So that is the solution that I suggest, I propose to you guys. So when we improve our C games, it will move like this. Our A game will become better, and our C game will, when our C game becomes better, it will improve our B game and A game as well. So improvement means forward movement of the bell curve. Okay, when the C game disappear, now your B game is becoming your new C game. So that is how we want to move into our trading journey. We will always have a C game, but we want the C game to be improved all the way, all the time. Okay, we want to have a consistent improvement and create opportunity to find a higher level A game. So this can only happen when we improve the biggest weakness that we have, which is our C game. Okay, so step by step, how to move into A game. Okay, so if we want to go into A game, we have to take time to think about our C game very deeply. And this also, like the emotional mapping, we will have to list down as well. So there are many things that we have to do after this webinar actually. So do it one by one. And maybe all of you guys, this webinar will not be helpful if we just listen. You have to note what is some call to action. What is some actions that you have to do after this webinar? There are many actions that you have to do because I compact all into just one short webinar. But so you just list down and try to do it slowly, one by time. How many games are in the trading actually? It's okay. We will go into that after this. So we take time to think about your C game and start with the most obvious. Okay, and then it's okay. All right. So team is as strong as its weakest link. So if you focus, okay, if you see this chain, it is as strong as the weakest link that connect the chain. So this is like your C game. If this C game is very strong, it will increase our overall performance. Okay, so that is about A to C game very generally. But what is exactly our A, B, and C game? Let's see inside. Oh, not yet, not yet. Okay, I forgot the slides. Okay, I think this one no need because we have limited time. Okay, so what we have to do is to fix our C game. Okay, all right. So A to C game, mental game analysis. Now we want to see the analysis of our A to C mental game. So in our trading execution, A to C game is basically is a performance range. Everyone in the trading execution have their own performance range. There are times we perform better than other times. There are times we perform worse than other times. So if we calculate it statistically, it will form a bell curve like just now. So that's where we categorize it as the left skewed curve is as the C game, and the right skewed curve as the A game. Okay, so now what we want to do is, what is the example? So C game, if we can define it, we can define it as obvious mistakes that we do. The reason where these mistakes happen may be because of our failure to control our mental and emotion that cause our emotion to become too intense. So it is very obvious mistakes. We know it very obvious. FOMO mistakes or very great mistakes are very obvious mistakes. So we can categorize it into the C game. And then B game is a mixture of mistakes between A and B game. And the reason B game happens, if we want to see what is our B game, is a mixture of weaknesses in tactical decision making and emotional mental control. Okay, while our A game is mistakes due to lack of knowledge. It is not because of something that we know, it is because of something that we don't know. So that is kind of forgivable because we don't know that's why we did that mistake. So we can categorize it as the A game. For example, we will see some examples after this. Okay, so in general, A game, what is the example? If we have very calm emotions, we make a very high quality decisions, and the mistakes is due to technical reason. So this is the kind of A game. B game, have a thought to make a C game mistake, like forced trading, but we manage to maintain the calmness. While the C game is full with emotional volatility. It is just full of greed, full of FOMO, full of fear, and we make very obvious mistakes. So this kind of mistakes, you will put it into the C game. So all of you guys should have your own A to C game, deep analysis, in which we will see again after this, so that you know, if you know what is the kind of C game that you guys did, you know what you have to improve. Okay, what you don't journal, you can't improve. So you have to journal it, you have to write it down, then you know what you have to improve. So a fractional, if you want to divide it, A to C game analysis, we can also divide into a mental game analysis and technical game analysis. So this is in term of mental game. In C game, we are very FOMO, like what I said just now. We think a lot about profit and losses. We think about the potential profits. Oh, if I enter this position, the price goes up. Oh my God, can make 1,000 ringgit today. We think about the potential profits. Or want to cover losses. Okay, it goes up 1,000 ringgit. Now I can cover some losses that I did just now. So that is the kind of thing that we think in our mind. Surprise when the price action is against us and we don't want to get out of the positions. Very familiar to us. Sometimes when we just when we just enter a long position in support, suddenly the price break the support. When we surprise, like it is something that should not happen. When we what we should understand is trading is a game of probability. The support can be broken. That's where our stop losses take place. But we are surprised because we thought everything should go into our plan. Everything should follow our plan. Technical analysis is perfect. That's what we understand. So when we still surprised when the price goes against us, then that means we have some C game left, and we stuck with some loser trades. Either in stocks or commodities, when it goes break our cut loss and we don't want to cut it yet, and then we're afraid to enter good trades when the opportunity comes, maybe because of some streak of losses that happen. So again, this is the C game. And B game is in the middle, little tense, stress, lack of motivations, think a lot about the result, easy to get bought if it's sideways. So this is still can a bit on the B game side. While the A game, in which this is our aim, is very relaxed and focused, alert but not stressed, happy to trade but not overexcited. And we clear our mind from previous trades. We might have 3-4 losses previously, but we can easily brush it off and have a clear mind and think every trade is a new trade. So that is the kind of game that we want to aim for. And in terms of tactical skill, C game is when we fail to TP at the target and always add and exit at lows. And B game is take profit and target, but can re-enter and pull back. And A game is it like perfect. Setup complete. I forgot to translate it. We set up complete, then we enter. We scale in progressively. Okay, so this we don't touch it all because we don't have much time. So that is the kind of A game that you want to aim for. So there's some research that maybe you guys can read off as well about this mental game. Okay, but okay, so understand. Now we already see about the inch-one concept and A to C game analysis. So when we already analyze it, our game into A, B, and C game, so this is the thing that you should do. Every one of us understand what is our C game, what is our B game. Everyone may be different. Some maybe have a good control on emotions, but bad in tactical, or maybe some good in tactical or bad in emotion. So that's why we have to write it down individually, all of us. When we have done that, then it's time to do some root cause analysis via mental hand history now. So this is another method. Okay, so there are some new things that you learn today. So the symptoms of the problem, all the C games that you see is the surface. It is the what do you say, the iceberg, the tip of the iceberg. What you want to do now is to dig deeper to find the root cause of the problem. And we will do this via a method called mental hand history. So there are 5 steps. So again, I think some of you guys may be overwhelmed because there are too many things to remember. But just to recap, the first thing that you have to do just now is the emotional mapping pattern. The second one is A to C game analysis. That's all. Now this is the third one. You have to do mental health history. Too many, too fast. I'm sorry very much. I know. There are too many, too fast because I just have a limited number of times. I compact, I think maybe over 20 hours of supposedly you can do in very short time, in 1 hour. Okay, I just want to share as much as I can in this limited time. All right. Okay. So step one, what you should do is to tell the problem in detail. Number two, explain why is it logical for us to have this problem, or explain why we think, feel, or react like that. Okay, now we have the problem. We already tell it in detail. Now we want to explain it. Why it's logic for us. It's logic for us to have this problem. So write it down. Why? Okay. Number three. Now number one, step one and two, is detailing our problem, but we know it is a problem. In step 3, we want to explain. Now we want to think logically. So if we think logically, why our logic in step 2 is actually flawed? What is the flaw in our step 2 logic? So we want to counter back. Okay, thank you, Adiba. Second time join class. Okay, now step 4. What is the argument to rebut our flawed logic? What should we do? Okay. And step 5, explain why our step 4 is correct. So if you can see, what we are actually doing is we want to get into very detail of our problem, and we want to counter the argument of the problem so that it will give us affirmation on what we should do and why the original thinking of our problem is flawed. That is what we are doing here. That we will see some example to understand this very clearly. So for example, step 1. To start, explain like you are telling your friends about the C game problem you have right now. So for example, right now you are explaining to your friends, like you are sharing your problems. I have very big emotional issues. Okay, so like you are trying to tell problems very emotionally. Write it down. And I explained this actually very deeply in a previous webinar, but it's okay. We go briefly here. Okay, so in step 1, we want to explain the problem with details, add extra details about the history of this problem. For example, if the problem started 6 months ago after something significant happened in your life, example, just married, just had a child, lose a job. So you want to understand, is there a time where the problem just started? It just started abruptly, or there is a time frame of when the problem actually happens? Okay. And step 2, explain why this problem makes sense to you. So the purpose is you want to know why originally you think your problem is very legitimate. Don't answer because I'm FOMO because I'm stupid lah. I'm FOMO because the market is very bad. You don't want to answer like that. So you want to think. This is quite hard because you have to think deeply and logically. And maybe there are multi-layer reasons. So you have to go one by one. Okay. Step 3, now another a more difficult steps to do. You have to fight your original feelings. You have to think logically now to fight the reason behind your original reasoning. Okay, we will see the example to make it more easy. Okay, let's go to example directly. Okay, to cut some time. Okay, so for example, step 1, you want to explain your problem in details. You say I can't accept my big losses because of blah blah blah. Okay, that is your problem. Step 2, why it's logic for us to can be able to accept the big loss, because my strategy is usually profitable whenever I use it, so I can accept whenever I have a big loss. So this is, you try to explain why it's logic for you to have that step 1 feelings. And step 3, now you have to rebut why the logic in step 2 have a flaw. So when I say that my strategy is profitable, now you are trying to think logically. When I say that my strategy is very profitable, it seems to imply that I will not get a big loss, whether I perfectly execute my setup or not. It maybe when you say that it's profitable, it's you are like trying to imply it perfect, it will never lose. So this is step 3. You have to rebut. It's actually, even though it is profitable in the usual days, but you have to understand that there are days that it can have some losses. So step 4, what is the argument to rebut the flawed logic? So you have to learn that you have to accept the losses. You have to embrace that feeling. Losses that can be obtained with correct execution is all right. If the losses is obtained, but you execute it correctly, then it is fine. And now explain why step 4 is correct. Profitable. So now you want to reaffirm or try to give some information to yourself. Why actually it is a very logical argument. Profitable strategies will have some losses and sometimes big ones, but our trading edge must have taken that factor into account. The bigger problem is letting the loss be bigger than it should be. So this is the flaw that what you want to do. So if you see this from the bigger point of view, you can see the flaw. The flaw you can see from step 1, that is your initial issues. Step 2, you want to give some logic why it is logic for us to have that issue, but then you fight that with a proper logic, the correct logic, and then you give the best argument to remind you that the correct logic is the correct one that you should remember whenever you have this issue again. So that is the purpose. Okay. So step 2. Example 2. We have some time. Okay. I think we have to. Okay, let's see some examples here. Okay, now second example, just to make it clear, although we have some limited time already. So now first one, we want to describe the problem in details. Okay, what you say, when I take a loss, it can lead to frustration and anger. Okay, familiar? Usually at myself for making a mistake. This can lead to an urge to get it back, which can lead to forcing trades to get what I want quickly. So that is your problems. You describe it very detailed. Now you want to explain why it's logical for you to have it. A loss means that I'm not making progress as quickly as I want it, and it feels personal and a reflection on me. So getting the loss back quickly is important to keep moving forward. Okay. Number 3, now you explain why your logic in step 2 is flawed. Your expectations are unrealistic. You want to remind yourself. Your expectations are unrealistic with the reality of trading and yourself. You are not perfect, and you are taking your losses far too personally. And number 4, you came up with correction to the flawed logic. Now you macam elaboration. Remember, your edge has losses built into it, so relax and trust it to lead you to success. Okay, so you can screenshot this and try to do it yourself. Try to describe the problem. Again, try to make it into a habit. Take it slowly. Okay, so this is what we call as mental hand history. So now we want to understand. Okay, I think it's 9:30. Okay, now we want to go deep dive into every emotions in the trading. Our greed, our fear, of confidence. We want to understand every emotions have different things that we have to understand. For example, the 3 main points are important to understand our emotions are the nature, the symptoms, and the mapping of the emotion itself. But I don't think we have enough time for that. So I'll just go through fast here, because we want to go to step 5 after this. There are 4. Okay, so there are many emotions that we have to understand that happen to every and each of us. Greed, fear, confidence, discipline. So this all of those have like different explanations and different understanding that you have to understand. So if we have to understand all of this, actually we have to take a longer time. So I try to just go fast. Okay, let's see if I want to. Okay, all right. I think we will skip this one. I think we will try to skip this one. Okay, there's a lot of it. Okay, let's go to the last steps. I think that is the important one. Okay, okay. Just maybe just some quick one. So when we want to we also want to map every emotions that we have, because that emotions is maybe perhaps included in the C game that we have just now. Okay, so we really want to make a map. Okay, so map our, for examples, our emotions of fear. So this is the example. We want to, if we have a fear pattern, so we want to pay attention and catch the signs. What kind of fear that we actually feel. So do the mapping pattern just now. What is our thoughts, emotions, behavior, and action? So the same thing. Okay. All right. So among the questions that we can ask ourselves is this kind of thing. What situation usually provoke fear in us? So it's the same thing as the mapping pattern just now, but we just go deeper inside. But to just add on some points is this for specifically on emotions of fear. These are some questions that you can ask yourself. What situations provoke fear inside you? Try to think, take time to think, 1 or 2 minutes. What kind of fear actually that you feel? Because there are many kind of fear. It's fear of uncertainty, fear of missing out, fear of losses. So there are different kind of fear. What specifically plays inside our head? What are we thinking? So this is, we want to go deep. We want to map the pattern. Okay. So, okay, some symptoms of fear, doubting that what we see is correct, take profits very fast because you are afraid of losses. So some symptoms of fear. So maybe you think you don't have fear, but you have these symptoms that means you have some fear inside you. Okay, all right. Okay, I see there are too many. Oh, okay. So you have to just, okay. I think maybe, okay. This is another level of mapping that we have to do for every emotion that I don't have much time to explain deeply, but just to gives you some insight. Even for our emotions, besides the mapping pattern, we want to try to divide the emotions that we have into several levels. For example, our fear level, we want to know. For every, we can maybe make at least 3 levels, but if we can try to make into 6, 7, 8, 9, 10 levels and see. So level 1 is the least, the most unfear, and level 10 is the most fearful kind of things that we think. Okay, so for example, in level 1 of fear, we look at the chart and ask ourselves, is position in the right decision? And am I doing the right thing? Or will this be a loss? So it's still fear, but it is a low level of fear. So we can categorize it as a level 1 fear. There is a reason for this, just I don't have enough time. But if you have time after this, you can do this. And level 8, for example, a higher kind of fear, you want to take profit as fast as possible when it starts to turn green. Okay, so why, if I can explain it very briefly, we want to do this kind of thing is, we want to categorize the level of fear that we have so that we know uh, every fear level maybe can be categorized in a different game in the A to C game analysis. Maybe we originally have only several level of fear, maybe 3 or 4 levels. So if we do this kind of detailing, we understand. We know what we have to solve. Maybe at this moment, this week or this month, we want to solve level 3 level of fear. And then we solve it. We know the solution to that level already. We know the solution, what we have to do to solve that problem. So now we know that what left inside us is just level 5, level 7 of fear. Then we can think of how to solve that problem after this. So we want to detail it like that. Okay. So if we detail it very specifically, we can check like a checklist. We know what we have to solve. Okay. Okay. Now I think, okay. Now we go to the last part. Okay, and it's 9:35. So how to solve our trading psychology problem? So there are 4 steps. The first one is to recognize that your problem have been triggered. you want to disrupt the momentum of those emotions, inject some logic, and use a strategic reminder. Okay, again, this should be a very long one as well, but let's see it briefly. So, like I say, recognize. You have to recognize in real time when the problem is happening. We need to come point. That is our target. We can correct our reaction whenever our emotions happen. We can correct it, but this will take some time because originally we cannot correct that reaction, that kind of emotional flaws, because we don't know yet what is the mapping of every issues that we have. We haven't we haven't make the mapping pattern yet. But if after this we already make a very compact full of our mapping pattern, now we know when this happen, okay, I know this is fear level 3, for examples. So this is what I feel. So what I should do is like this. We know what happened. So then we can correct our reaction when it happens. That will only happen when after we do all those strategies previously. So to correct the reaction, it is a combination of having the right logic and making sure the logic is explained so clearly in our head that it is strong enough to stop the pattern that is starting. So that is the function of the mental health history just now. You want to, in the mental health history, if you guys still remember, on step 3, 4, and 5, we want to inject some logic. Why? There is a flaw in our argument in the step 1 and 2. So this, we will inject some logic inside our head. Okay, we should not do this because of this. Right? Okay. So that is just the overview. So the step 1 just now is to identify the problem. Okay. To identify the problem, we have to do the mapping pattern that we did just now. Okay. We cannot solve problems that we cannot see. So we want to reach the level of our internalized map. And there is intense emotion. Recall, we do step 2. Okay, now step 2 is to break the momentum. When that emotion happens again, FOMO, fear, greed, we want to break the momentum. So like Newton's first law, we want to disrupt the momentum, create separation between reaction and correction so that the impact is greater. So 4 ways of disruption that can be done. Okay, so this just very briefly. Maybe when that happened, we have to realize it happened first. The problem is happening, then we can, before we react, we have to disrupt it. We do a deep breath, write, take a walk, talk. So this is some examples that we can do. Don't immediately react by doing the things that we usually did. But now that we know what we usually did when we have that kind of reactions, because we already did the mental health history and the mapping of pattern, we know that if I suddenly see my losses got stopped and the price goes up, I know I will do this. So now I have to stop. I cannot do that anymore. So you take a deep breath, stop yourself, go away. So this is kind of disruption. You want to disrupt your reaction. So those who trade a lot need more to build. Who trade a lot more need to build a faster process to disrupt the pattern. So this is the example, the principle that you can do, and maybe you have some other things that can help you to disrupt your reaction. You don't want to react on what you usually do. But for you to disrupt the reaction, you have to know what is your normal reaction. And to know your normal reaction is to do the mapping pattern. So you can see the flow now. So that is why it's important for us to do the mapping pattern and all, so that you know what is your normal reaction and you want to disrupt that reaction. You want to break the momentum. And number 3, what you can do is to enter logic. You want to talk to yourself. So the enter logic here is where the mental health history comes for. The mental health history, the step 3, 4, 5 is where the logic is. So you want to tell yourself, self-talk. It is normal for losses to happen. You read back the step 3, 4, 5, tell yourself this is normal. So this is the kind of things when the fear of mistakes. Sometimes sitting on the sideline is risky. When you hate mistakes, you tell yourself, sometimes we win, sometimes we lose. Okay, so this is kind of self-talk you have to do. When you FOMO, the market is full of opportunities. You have to self-talk yourself. We will not be able to catch them all. So you have to do some like kind of list for you to know if this emotion happen. You have to self-talk this kind of these things to you. Maybe look, put like a sticky notes inside in front of your laptops or reminder on your phones. So anywhere that is easy for you to see, so that when the thing happens, you can see and remind you immediately. Okay, so this is where the mental health history comes from. And the step 4 is a strategic reminder to improve your execution. So you make a list of your common mistakes, write down your decision-making process, inject logic, and make some reminder what is your strategy and technical strategy. Okay, so this is the 4 steps. I know I didn't explain it very detailed because we have a limited number of times. This should be done in a very long period of time so that it's more easier for us to understand. But I hope you can understand some part of it, if not all, and apply some part of it as well, if not all. Okay. If we want to throw it in, okay, if we want to, I want to put all of these into places as a conclusion is an example how we want to apply it into a real time. So a confidence level, for example, our problem is our confidence level. We map our confidence level into several levels. Okay, there are two kind of mapping. So the mapping pattern is the first one is where we write down what is trigger our thoughts, how do we react, how do we act, what is our behavior. That is number one. Number two is we mapping it according to the level. So this is where we map our confidence level according to the level. So level one of confidence is what? So we want to combine all the steps to solve our problem is okay. For example, confidence level 2, we are arrogant, we have an arrogant attitude sets in, convinced that I can lose and I can outsmart the market. I take action to push it. So you try to detail it as much as you could. Okay, I immediately felt unsettled and insecure as I get out of my groove. So okay, this you have the problem of arrogance because you convinced that you cannot lose. So how you want to disrupt it? So step back from the screen, take a short break, and reset and recenter myself. So write it down like this, so that you know what you have to do for every problem that you have. Logic. What is the logic? Is this change part of your strategy, or are you just pushing it and ego stroking? Ego equals to failure, strategy equals to success. So you want to remind yourself of these things. So for every problem, this is problems that you have, you want to have some kind of disruption and logic that you want to inject yourself as part of your solutions to solve your problem. Okay? Okay, something. Okay. I think I'm so tired of talking. I'm sorry for talking too fast. I have no choice. But that's it for today. Maybe some questions.